Welcome to The Explainer, everyone. Today we're unpacking a topic that is absolutely fundamental if you want to understand how our modern, hyper-connected world actually works. We're talking about the global dynamics of economic investments. We are going to look at these massive flows of wealth that are constantly circling our planet. Specifically, we'll unpack the nuts and bolts of how multinational corporations project their money and their power across international borders. It's a hugely complex system, but together, we're going to see exactly how these powerful financial currents literally shape sovereign nations, economies, and everyday lives.
So, right off the bat, when corporations cross borders, who really gains control? You know, when we talk about cross-border finance, we aren't just talking about shifting numbers from one bank account to another on some giant global spreadsheet. We're talking about incredibly high stakes. We're talking about massive, powerful entities stepping into sovereign nations and the delicate balance of power that immediately shifts the second that happens. Keep this question in the back of your mind as we move forward because it's the absolute heart of our analysis today.
Okay, let's dive into this. Section 1. Decoding foreign direct investment. So, what are we actually dealing with here? Well, at its core, foreign direct investment, or FDI, is all about multinational corporations projecting their capital abroad. Now, this isn't just your standard import-export dynamic, and it's definitely not just short-term stock trading. This is about establishing a real, tangible, operational foothold on foreign soil. It's the direct action of a company based in one country taking its resources and injecting them directly into the infrastructure and the economy of another.
And what's the driving force behind establishing this kind of footprint? Well, it's actually pretty simple: control and influence. These investments, they aren't just random. They are highly calculated moves for leverage. Multinational corporations use FDI to actively secure a prominent seat at the table in these foreign environments. They want direct operational control over their assets, and they absolutely want sustained influence within those new borders. Ultimately, it's a highly strategic expansion of global power.
Moving on to Section 2. Impact on host countries.
Now let's look at this from the other side. For the host nation receiving this money, the immediate influx of resources is incredibly potent. We're talking about a rapid injection of capital and advanced technology, which naturally requires a localized transfer of expertise. Suddenly, local workforces are being upskilled just to operate this new infrastructure. Plus, partnering with a massive global entity instantly kicks open the door to worldwide market access for the host nation's own domestic products. I mean, these are undeniably attractive, highly tangible economic catalysts.
And this brilliantly illustrates the true complexity of the situation, because FDI is a seriously sharp double-edged sword. On one side, you've got that rapid influx of capital, tech, and expertise we just talked about. But wow, the risks are equally formidable. Host countries often face cultural interference, where entrenched foreign corporate practices can clash with or even completely override local traditions. Then there's the threat of unhealthy competition, which can lead to severe market cannibalization that essentially stifles local domestic enterprise. And we can't forget the intense overuse of resources, where foreign entities might aggressively extract local materials at a totally unsustainable rate. It's a strict socioeconomic friction that host nations have to constantly manage and regulate.
Which brings us to Section 3, the corporate gamble.
Let's flip the perspective entirely. For the multinational corporations making these moves, the calculus is intense. The upside is, of course, undeniable. They get direct access to entirely new, untapped consumer bases and vital raw materials that they absolutely need to scale up. But the exposure? It is equally severe. By crossing borders, they step right into complex political crosshairs. We're talking everything from sudden regulatory shifts to outright asset seizure. And all of this is heavily layered on top of deep economic uncertainties, like unpredictable currency volatility and sudden local market crashes. So it is a massive, high-stakes roll of the dice.
So, after all of that, we are left with a fundamental question. In the complex web of global investment, is the risk always worth the reward? We've seen exactly how corporations aggressively gain access and influence, but simultaneously expose themselves to severe volatility. And we've seen how host nations secure critical capital and tech, but run the risk of intense market cannibalization and resource depletion. It is a constant, incredibly delicate balancing act of power and global economics. Thank you so much for joining me for this explainer. I'm going to leave you to ponder exactly who truly wins when corporations cross borders.